Hey guys, so we're back with raw, unedited, unfiltered vlogs. This time I want to answer what are you supposed to do when you are investing using peso cost averaging in times like this where there's a lot of uncertainty, there's a lot of people thinking that this is the recession already, thinking that a crash may possibly happen, or they're possibly thinking that hey, the market may go even lower than where it was before. So as you all know, there's a larger portion of Filipinos investing that are not really traders, but they're more investors. They're more they want to just be in the market for a very very long time. So this video is catered to that, and I know there's a lot of people who are investing via peso cost averaging, and I got a lot of messages asking what are they supposed to do right now, right here, right now, when the market is down, when the market has dropped massively. Please remember, the market has dropped from 9,000 to 6,300, and those who invested at 9,000, 8,500, 8,100, 7,800, 7,700, 7,300, 7,200 are at this point of time experiencing paper losses as well. That's why we're gonna clear the air and talk more about this so you get a lot of context on how you're supposed to go about it, because again, the heart and the goal of this is to help you make the right decisions in your money. And that being said, also, this is how the chart looked like, as you all know, massively down. And I know that when things like this happen, a lot of people get panicky, a lot of people get scared, a lot of people would succumb to seeing their portfolio be in the red and down, and a lot of people normally would be emotional, especially if the money that you place in is quite significant. That's why, even though it's significant, I'd always tell people that you always put an amount of money that you do not plan to touch, but above and beyond that, it should be an amount of money that even if it goes to zero, you're supposed to be okay with it. It should be an amount of money that if it drops at a certain level, you're supposed to be okay. You're not gonna panic. You're not gonna be emotional about it as well. So that's why it's very, very important, above and beyond proper rudiments of fundamental analysis, proper rudiments of technical analysis. It's always about financial planning, because planning your investments well, planning your goals well, putting the right amount of money and not being too greedy about it will protect you. So before we go and talk about peso cost averaging in times of crisis, would super appreciate it if you could subscribe. And if you're new to this channel, I'm Marvin Gurm. I'm a stock market trader and investor, and I make YouTube videos to create a good narrative for Filipinos that aside from having a business, aside from having a job, if you're a lawyer, accountant, you're a doctor, you're an overseas Filipino, you can build another asset class by investing in the stock market. And the whole goal of this channel is just to give education. The whole goal of this channel is just to teach, inspire, educate, so that more and more Filipinos get to invest and get to reach their goals of financial freedom. So what are you waiting for? Subscribe, smash the bell, and if there's any part of this video that is something that's appealing to you, super appreciate it also if you could like as well. So before I also give the context of what are you supposed to do in times of crisis, allow me to frame this conversation first on what exactly is peso cost averaging, because I there might be people who may be watching this and they don't know what peso cost averaging is, or there may be people also that have started to invest but don't know what peso cost averaging is, or they have the wrong mindset, they have the wrong framework on what peso cost averaging is and how it works and what it does to people as well. Full disclosure also, I'm not a person who does peso cost averaging. I really leverage my investments based on technical analysis and fundamental analysis, meaning all of my decisions are predominantly based on that. But just also to add context to it, I have some index funds where I still employ buying on a regular basis, but doesn't mean it's really peso cost averaging as well. So basically, what's peso cost averaging? Peso cost averaging is you putting a steady amount of money on a regular basis. So what's important about peso cost, and I've been saying this over and over in my videos, is it's never about the how big of an amount you put on a regular basis, but it's about the consistency and the discipline to put a specific amount of money no matter what happens in the market. So good market, you put money; bad market, you put money. And that's why I've been saying this over and over. You only put an amount of money that you can afford. You only put an amount of money that doesn't stretch you. That if you can only spare 500 pesos a month, then go for it. Put 500 pesos a month. It does not matter. What matters is the consistency, that you are the discipline, the patience, that you are not trying to get rich quick. Because I'll tell you this, putting in 500 pesos a month and you do it for a very, very long time, what's gonna happen there is you're gonna see, hey, kaya ko pala yung 500. I'll try 1,000 pesos. I'll try 2,000 pesos. I'll try 5,000 pesos. I'll try 10,000 pesos. And you've seen it in the previous videos that I posted. The consistency, when you start increasing the amount of money, it becomes massively, massively, massively strong for a stretched period of time. So that's what I wanted to share. You start with what, no matter how small of an amount it is, because it builds your stamina. It builds your how good you are, how strong you are in terms of analyzing your investments. It builds. If you are faithful with 500, you build the experience, you build the skill in that. Putting 1,000, 2,000, 3,000, 4,000 won't just it's not just you leveraging what you learned from 500, but you already know that it actually works also. So if there's a question if cost averaging will work, it does work also, and it's all about finding if it fits you or not. So that's very, very important. You need to make sure that peso cost averaging is something that fits you, because there's no such thing as a one size fit all investments. That's why when people say that you have this is peso cost you have people are forcing technical analysis on a lot of people are forcing dividend investing to a lot of people are forcing peso cost to a lot of people are forcing valuations to a lot of people. No, don't do that. Yeah, you cannot force whatever style of trading or investing that you can to different types of people, because it does not work. What works for me won't work for a lot of people. What works for a lot of people may not also work for me. And it's your responsibility as an investor to take the time, take the due diligence to actually study and learn what will work for you as well. Because again, it's your money, it's your responsibility. We're at the 6 minute mark. Comment below, guys, if you're learning. Comment I'm learning. If you're learning, give me a thumbs up if you're learning. And by the way, if you like this format, no face, no edit, raw, as can be. I want to hear if you like this style also. But anyways, who is peso cost averaging for? Personally, they're for long-term investors. These are for people that, when I say long-term, no, at least, at the very, very, very least, 10 years, not lower than 10 years, more than 10 years. The longer, the better. Imagine this, if you're 20 years old right now and you do this for 40 years, no matter if a market crash will happen in between, you're supposed to be okay, because time, I believe that in timing the market, I believe that timing is amazing. If you know how to find strategic areas for reversals, you know how to find strategic areas where the markets will bounce, you know how to find areas when the market is cheap. That's amazing. That's so powerful. But time is also amazing, because time is the greatest amplifier that will help your money grow, especially if you know what you're getting into. So when I say long-term investors, please do note the context that these are for people who at least have 10 years in the market. So if you're investing, you invested 2017, you invested 2018, and then you're disappointed right now 2020 that it's not doing so well, but you're a peso cost, your mentality is to be a peso cost averaging investor. You got the whole context wrong, because you're only in year two, you're only in year three. And I'll tell you this, some of my investments that I invested 2007, 2008, some of them I made massive earnings 2013, 2012, 2014. Some of the investments that I got in 2009, I reinvested it back again, it earned 2015. Some of the investments I earned from 2010, I earned 2011, but I reinvested it, some earned 2017. Why? I'm not in a rush. It it surprises me why so many people are so in a rush to get rich. And if you talk to every person that made massive amounts of money, from Warren Buffett, Bill Gates, Jeff Bezos, what they have is patience. Patience will help you win the game. The best way to get rich is to get rich right. You have to love the process. You have to love the process of growing wealth for a long period of time. And that's so important. That's why I'm taking the time to dwell into this, because kasi sobrang daming tao gusto yumaman kagad eh. Sobrang daming tao, they cut corners that it's as if earning a small amount of money over a short period of time is good. But here's the thing, you want wealth that's a lot, you want something that's long lasting, you have to love the process, you have to be patient, and patience always wins. Now, these are for people who are not just long-term investors, but these are for people who do not want to time the market. So if you're a person that you know that you're not just a long-term investor, but you don't want to learn support and resistance, you don't want to learn valuations, you don't want to learn PE ratios, you don't want to compute for the fair value of the stock anymore, but you just want to spend a very very long time in the market, then this is for you. But please remember this: it's not an excuse that you do peso cost averaging, that you don't know what you're getting into. You have to know what you're getting into, regardless of what investment it is, regardless of what asset it is. Because if you don't know what you're getting into, that's very, very wrong. That's one of the biggest ways for you to lose a lot of money on a stretched period of time as well. That's why I'll say this also. One of the biggest conditions for peso cost averaging is that fundamentals is still very, 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 very important. You need to know the company that you're buying. You need to know if the company is good. You need to know if the company is growing. You need to know that if I buy it today because of its growth, it will still look undervalued because its growth trajectory is actually good. You need to know its level of debt. You need to know its level of liquidity. You need to know, is it part of where the economy is headed as well. You need to know also, how is it giving dividends, is it not giving dividends, are the dividends increasing or are the dividends decreasing as well. All of those things are so important. All of those things are things that you need to at least factor in when you need to make that decision, because again, it's your money. And that's why I always tell this to a lot of people: spend a lot of time analyzing, spend a lot of time doing your research, spend a lot of time doing your due diligence when you try to come in and out of you trying to buy and sell whatever stock, or if you are putting in money for the long term. You need to know, if you're studying 20 companies, you're studying 10 companies, sometimes you don't have to buy 20 or 10. If you're a long-term investor, you just have to buy a few ones, one, two, three, four ones that you believe is really, really good, that fit your criteria, that fit your parameters and how you're supposed to buy and sell stocks. And here's the thing: if you are into peso cost averaging, this will work very, very, very well if you are buying stocks that are growing, growth stocks, stocks that you know, because of where they are in 2020, how they're positioned, how they're earning, and based also on their track record, 5, 10, 15, 20 years from now, the stock price, the growth of the company will be massively well. So people are saying, Pan and Marvin, how can you say that the stock price will be up because of their growth? Think about it this way: if the company has 10 stores right now, and in 20 years they have 1,000 stores, for sure their income will be higher. For sure their dividends will be higher. For sure, from the price that you're buying it right now, it would be massively cheap, because if the price right now is for 10 stores, and then 15 20 years later they have 1,000 stores, I'm pretty sure that their income will be massively, massively, massively well. This also works for people who want to invest in dividend stocks. These are for people who alam mo yun, you just want passive income for life. And I have a portfolio where I buy stocks with dividends, and it's amazing, because dividend investing is passive income for life as well. As long as the company is good, as long as the company is earning, and they have excess earnings on top of their expansion, they will make a lot of money for a very long period of time. And here's what's interesting about dividend investing: since you're an investor, you're waiting 10, 15, 20 years while you're not selling your stock. You're getting passive income while you're not selling your stock. Should the market crash but the company still do well, you will still get your dividends. You will still make massive amounts of money. So do not underestimate dividend investing. And that was one of my biggest mistakes when I was starting out. Hindi ko siya pinapansin. To me, it felt that like it was something that was so boring. But what I want to share to all of you is that it's not boring. It's not something that you shrub off. But tama naman, when I was younger, di ko siya pinapansin. But as you start making more, either from trading or investing or from your growth stocks, you need to set aside money that into stocks that will give you dividends, because that's what's going to give you passive income for life. So especially this, if you're buying some stocks with dividends, for sure, if the company is good, the yield will just get higher and higher and higher, especially if your cost of acquisition is low. Third, index funds. If you are if you don't want to pick individual stocks, peso cost averaging is so good, so amazing for people who want to invest in index funds. Meaning, you index funds, kasi the main difference between index funds and buying individual stocks is if you buy individual stocks, may chance kasi na magsara yung company. But if you buy index funds, never magsasara yung company, never magbabankrupt yung mga companies inside that because the PSE recalibrates the 30 stocks on a regular basis, meaning if there's a company that's bad, battered, and its market cap falls, it most likely will be out of the index. That's why I can say this confidently to all of you. When you invest in an index fund, there's a chance that it could drop, but it will never go to zero. There's a chance that it will drop, but index funds normally go higher than where it was before. Now, with all that being said, what do you do in times of crisis? What do you do when people are panicking? What do you do when there's a threat of a recession? What do you do when the market is massively bearish? What do you do when the market dropped from 9,000 all the way to 6,300? Do you guys want to know? Before that, though, just a quick plug as well. For those who want to learn more about technical and fundamental analysis, I'd like to invite you on my schedules. These are live training courses, classroom training courses, February in Taiwan, March in Manila, tapos na yung February, March in Manila. It's actually happening this Saturday, April, London, May, Singapore and Doha, June, Auckland, New Zealand, July, Sydney, Australia, and November, we're gonna have Dubai and Tokyo. So classroom settings, all of the details are in the description. You just have to click it and it will bring you to where you're supposed to see all of the venue, the timings, and everything will all be there. So back to the topic. What do you do in times of crisis? Since you're doing peso cost averaging as what I've mentioned, you're putting a steady amount on a regular basis. You're putting a steady amount no matter what happens. My suggestion, stay the course and keep on putting in money. I repeat, stay the course, keep on putting in money, especially if you're into an index fund which will never close down, which historically will always go back higher, or if you're buying good companies, if the company's fundamentals does not change. I repeat, if the company's fundamentals does not change in times of crisis, meaning they're still good, massively good, they're still growing, then you stay the course. But I'll qualify this also. If the company changes, the company's bad, the company's losing money, the company's not doing so well, sell. Sell. It will always go back to fundamentals. If the fundamentals are bad, no matter if you're doing peso cost averaging, you sell, you take profits, or you cut loss, regardless of what it is. People always say, pag investing, you do not cut loss. No! If you are an investor and you believe the company is not doing well already based on your parameters, based on your criteria, you sell. But if the company is still doing good, it doesn't change its long-term trajectory. In times of crisis, stay the course. Put in the same amount of money. Do not deviate from your plan. If you are putting 500 pesos, put in 500. If you're putting 10,000 pesos, put in 10,000. If you're putting 100,000 pesos, put in 100,000 pesos. Stay the course. Stay the course. Keep on putting money. This will compensate for times where you bought when the market was high. And please remember this: if you're an investor, you should realize that the strength there is you buying when it's low. You should realize also that down markets should be is an opportunity for you to make your average lower. Down markets is an opportunity for you that, hey, when the market is battered, when the market is beaten down, when the market is not doing so well, this is an opportunity for you actually to make massive amounts of money. Also, not in 2 months, not in 3 months, not in 4 months, but under the context of long-term investing. Take moments like this to see stocks but at a discount, and later on that's when you get rewarded. This is not get rich quick. That's why people don't like this, because this is boring. But sometimes the most boring things are there to make you rich. This is not something that's sexy. And like technicals is amazing, but the technicals has a lot of action. Technicals has a lot of excitement. This is not exciting. This is boring. But this works. This works over and over and over and over again. I remember it. 2008 crash. Jollibee was 35. I remember Ayala Land being below 10 pesos also during the crash. Opportunities when markets drop massively will be a time for you to be able to position well. Money in the market is not in the monitoring. No matter how much you monitor the market, you're not gonna be rich by monitoring the market, watching it every second. That's a fallacy. That's a lie. You don't have to watch it every second to make massive amounts of money. Money is in the positioning. Money is when you know what you're getting into. Money is made when you don't follow what everyone else is doing, but you follow what works for you. You follow your strategy. That's why I make videos to teach people, but I will never say that you follow what I'm saying. You follow what works for you. You follow what, based on sound information, is something that will make you money for the long period of time. We are now at the 19-minute mark, guys. I don't know if you guys are staying. I want to know if you're staying. Comment, I'm staying at the 19-minute mark. I don't make long videos as long as this, especially kung ako lang mag-isa. But I really feel that since there's a lot of people doing peso cost averaging, this is something that's so important at such a time as this. And as you all know, the heart of this channel is just really, I just want you guys to win. I want you guys, when everyone else is scared, you're the one who knows what you're getting into. And this is where we are in the market right now. This is a big drop. But please remember, as you look at this, you will see that market drops happen. It's just that now it's longer, bigger, stronger. But again, it will always rebound, especially if you're just buying the index. The index will always bounce back up. All you have to be is patient. Sometimes people are not patient enough to wait for it, and people are not patient enough because they're exposing themselves to an amount of money that they should not expose themselves into. So anyways, just to go back to what I'm saying, what I want to share basically is also this. As you see it drop, this drops here. Please remember, when the market was high, 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 all high here, it allowed you to buy at a very, very high price. But now that the market is low, it's over here, it's now positioning you also to buy at a lower price. And diba, that's what we want when we're doing peso cost averaging. It's all about buying low and appreciating the gains over a stretched period of time. That's why I said it over and over. This is for long-term investors. If you're impatient, this is not for you. These are for people who want to plant, let the ground take care of it, and let time push it through. And that's very, very, very important. So it's very, very important that you need to follow your plan. It's very, very important that if you're doing peso cost averaging, you see your stocks in the red, you see your portfolio in the red, do not panic. Do not change your rules in the middle of the game. You will lose money if you change your rules in the middle of the game. You will lose money if, when at the first sign of red, sabi mo, ay, hindi, magka-cut loss na lang ako sa trader, trader, I'll come back when it's lower. It doesn't work that way. It works when, please know this, peso cost averaging works if you know what you're buying, if you're studying what you're buying, if you know what you're getting into. You will lose money if 15 months along the way it's not working, and then you change your rules. Don't. Follow your plan. Stick to your plan. If times are uncertain right now, stay the course. 10, 15, 20 years from now, what you sow today, you will reap the benefits of it. Just don't rush. Be disciplined enough. Just a quick plug also, if you want to learn more of all of the things that I'm talking about, but you don't have the time to attend the training sessions, I have 5 books. Number 1 is Stock Investing Made Easy. This is the basics of the market. Number 2 is Winning Strategies for Investing, where I talk about strategies on fundamentals and technicals. Then third is Stress-Free Investing, where you do portfolio management on how you do your investing. Number 4 is Where Should You Invest? It's the prequel to these 3 books, where I talk about the basics of investing, where I talk about the basics of mutual funds, bonds, stocks, real estate investing, business, everything, and personal finance. Everything is in this book. And lastly, Breaking the Resistance, where I talk about trading the markets using technical analysis. Then I have 2 online courses. One is an online course with Sean C. By the way, the link is in the description below. You can order via Shopee. And this online course is about make money, grow money. It's about business and investing. It's about how to become an entrepreneur and how to become a stock market investor. It's on the link below. It's in the description. I have this course with Sean C. Then another course, the basics of the stock market, pero sa wikang Tagalog naman, it's the basics of the stock market with Chinkitan. It's called Stock Market for Everyone. Link is in the description below. Also, you can just click the link on how you can register as well. So there. So this is my take on the whole peso cost averaging on times of crisis. This is my whole take on peso cost averaging on times when things are not doing so well as well. So there, I hope that you guys got a lot from all of this. I hope this is something that added so much content and value to all of you. I hope that whatever's talked about here, you got a lot from this, and I hope this is something that will make you reach your goals of financial freedom as well. So that's it for now. If you're new to this, super appreciate it if you could like, subscribe. This is Marvin Germo, and I hope this video helps you trade well, trade strong, trade smart. See you all again soon, guys, and God bless you all.